What's your exit strategy for gold and silver? Get mine as it happens for free just by accumulating metals through goldsilver.com.
So, mining shares, and in this coming inflationary event, how do you think mining shares will behave?
Mining shares are stocks first, and they're gold and silver second. And so during any market crash or recession or something like that, the mining shares will go down, and gold and silver will turn around first and go up. You know, I really need to go back and look at '08 and see when the mining shares turned around. I doubt if they turned around at the same time that gold and silver did, because gold and silver started rising in 3-4 months before the stock markets were finished crashing. You know, they crashed at first due to margin call and due to people that have a lot of different investments, and they may have precious metals futures, and they might have GLD or SLV on their trading platform, and they get big margin calls on their regular stocks and options and stuff like that that they've got going on, their leverage. And there is you can hit escape and it'll ask you, are you sure you want to sell everything? And you can say yes and liquidate your entire portfolio. And I'm in the crisis of '08 when gold went from almost 1,100 down to under 8, and silver fell from 21 down to 8 something. That was a lot of the pressure of trying to come up with cash for your margin call. And that's sort of the fact that gold and silver turned around months and months before the stock market, the general stock markets continued to crash, proves that.
And so, but when did the gold stocks, for instance, Homestake, we hear this tale of Homestake going up multiples.
Yeah.
When did Homestake turn around?
I would imagine that was in '34 when the price of gold went from $20.67 an ounce to $35. And by the way, you know, people call it Roosevelt repricing gold. You can't reprice gold if the entire world is using gold and you're on a gold standard. What you're doing is devaluing the dollar. And he was authorized to devalue the dollar up to 50% against gold. And they would unpeg unpeg the dollar from gold, and exchange rates would change, and they would repeg. And this was a process of a month and a half, so it wasn't Roosevelt repricing gold. It was the free market devaluing the dollar when it comes to exchange rates that did it. But once gold jumped from $20.67 an ounce to $35 an ounce, or in other words, the dollar being worth 1/20th of an ounce of gold and falling to being just worth 1/35th of an ounce of gold. Once that happened, prices did not adjust immediately. So suddenly, gold bought a whole lot more stuff in society. And that meant that mining became extremely profitable, and the U.S. government became the world's biggest buyer of gold at that point, and every mine on the planet was selling gold to the U.S. government at this new price because you could buy so much more with the proceeds from selling it. But you know, I don't really follow that as much, and you asked me about mining stocks, and the reason I'm not in any stocks right now is there are certain times to buy mining stocks and certain times not, in my opinion. I know this is a mining convention here, and you're here to talk with mining companies about purchasing stock, but if you look at the HUI index or the XAU or the Barron's Gold Mining Index versus gold, or the HUI versus silver, what you see is that over the long haul, the stocks do not do as well as the precious metals. From 1971 to today, gold has outperformed the Barron's Gold Mining Index by 400%. And gold can't go broke, it can't have a mining collapse, it can't have EPA problems, it can't have a labor strike. When you're investing in a mining company, you're investing in a group of people. And you really should have somebody that invests. If you pick the right mining stock, you get great leverage and you'll do very well. But you're always introducing risk. So you should have either do a lot of studying yourself or have really good advice. And that's the reason I use people like David Morgan and other advisors when I'm getting into mining stocks. But right now, I don't think this cyclical bear market that we were in for almost 5 years here, or over 5 years, I don't think it's completely over with. We bottomed back in December and we've seen a pop. I think we might see a double bottom, or it might even go down a little bit further. I think that when this next recession hits, it's going to be a global event, and I think gold and silver will probably fall just like they did back in 2008, and then they will turn around as people start rushing into them as a safe haven investment. And then a little bit later, you'll see the mining stocks bottom. If you can go on stock charts and you type in $gold, colon, which is divided by $HUI or XAU, one of the gold mining or silver mining indexes. And you can see whether the stocks are outperforming the metals or the metals are outperforming the stocks. And the metals outperformed the stocks from 2000 until 2004 or 5. And then the stocks did not outperform the metals. The stocks did very well from 2000 to 2005. And then they sort of went sideways, took a big dip in '08, and then they have been going down from 2011 very severely against gold. And so right now, if you had bought gold back in the year 2000, you would have more, your account would be more valuable than if you bought the same stocks that are in the XAU or the HUI index or the Barron's Gold Mining Index. And I just find it, the XAU, it only goes back to 1996, but when you divide it by the price of gold, the stocks in the XAU are only going down. There's no period of time where they really take a big rally. The HUI is the unhedged mining index, and that one gave you great leverage from 2000 to 2005. But then it was pretty much over with, and it's better to hold gold. And I was just lucky I did these studies at the right time to make the determination, oh, I should probably be selling my stocks and go back into gold at this and silver at this point. So it was just coincidence that I decided to study those and divide these indexes against each other. Yes?